Ecobank Transnational Incorporated, a leading Pan-African banking group, visited the Nigerian Stock Exchange to perform its 2016 Facts Behind the Figures. To mark it, the management of the bank, led by its group CEO, Mr. Ade Ayeyemi, performed the ceremonial closing gong for the day. The CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema, in his opening remarks, lauded the bank for its value in engaging market stakeholders on its operational development.
On behalf of the Council, management and staff of the Nigerian Stock Exchange and the entire capital market, I welcome the board and management of Ecobank Transnational Incorporated, PLC, to this Facts Behind the Figures presentation. We are pleased that Ecobank Transnational Incorporated, ETI, continues to use the Facts Behind the Figures platform to further inform the market of its strategy and operational developments, as well as its financials. As the market is driven by timely, relevant, and accurate information, your regular interactions with the market through this forum is very welcome, and will encourage you to continue with this trend. I believe that in spite of the several policy and economic challenges, listed companies remain resilient and continue to offer profitable investments and wealth creation opportunities to our esteemed shareholders and investing public.
The group CEO, in his presentation, re-emphasized the essence of banking.
A bank is always an institution to the society that is built on trust. And the trust is because when people are able to work, they give us their savings with the hope that when they are no longer able to work, we'll have kept it properly and be able to return it to them. There's no greater trust that is more than that.
Head Financial Reporting for Ecobank Transnational Incorporated, Mr. Ayo Adepoju, in his financial presentation, highlighted some of the key performance for the year 2015 and also first quarter 2016.
Based on what we published for 2015 results and first quarter of 2016, I'll just look at some key numbers here to illustrate our performance. Starting with the top line, our net revenue, as a consequence of offering financial solutions to our customers, we recorded about $2.1 billion. Whichever metric we want to look at it at, $2.1 billion represents a significant amount of money. So in terms of companies operating in Middle Africa, posting $2 billion is actually very significant. And it's just to mention that although it's showing a decrease of 8%, because we present our numbers in United States dollars, so we are affected by currency volatility. It is important to highlight that most of our performance, the underlying business activity, is actually either done in Naira, CFA, which is a Francophone currency, and Ghana Cedi. So these three currencies account for about 85% of our financial performance. So in the year 2015, we saw some volatility. For example, Naira and CFA depreciated by about 16%. Ghana Cedi is depreciated by 22% on a year-on-year basis. Moving on to the next slide is actually to talk about the impact of our currency, the volatility on our performance. The numbers in red highlight what the impact actually is. On a top line perspective, the impact on revenue was about $377 million. Bottom line, the impact was about $28 million. On our loans, deposit, and total assets, our loans, the impact was about $1.3 billion, while deposit was about $1.9 billion. So these are significant numbers based on the currency volatility. We can see the quarterly movement. Just like I explained, we saw some growth in impairment charges in the fourth quarter of 2015. So that's why we had a loss in that particular quarter. But in 2016, we've seen the starting point of the ROA expansion. As we go further down the lane, our strategy is about delivering sustainable ROE to our shareholders through the cycle. This particular slide shows the quarterly balances in terms of our loans book. So we can see on a year-on-year basis, loans reduced by from 12.7 billion to $12 billion. This particular slide is very important. It shows the strength of our platform because if we look at our revenue, we can break it down into two components, the funded part and the non-funded part. Looking at the proportion of our non-interest revenue, it's about 46%. Compared to our peers in the market, they've got a much lower proportion of net interest revenue. The way we look at capital is changing going forward because capital is very scarce, so we have to utilize our capital efficiently across the regions where we're present. That is what is informing the decision to, as a strategy point, there are some countries where we'll play for market leadership. There are some countries where we'll just look at for product profitability in our market. Based on the operating environment where we're present, it is important to move in line with what we see, the opportunities that we see in those markets. That is why, in terms of our balance sheet growth, it will be very, very moderate. We expect our deposit to actually increase by about 2% in US dollar terms, but if we quantify that in local currency, that is actually about 10% because we do our business in local currency most of the time. Now, in terms of loan book, our loan book on an aggregate basis is going to be flat. There are some markets where we'll grow. There are some markets where we'll actually preserve capital for our shareholders. But on a balanced perspective, we expect our loan book to actually be flat. Now, the impact on our performance, the P&L side, revenue on that basis, because we're not growing our loan book, we expect our revenue to be flat as well. Our efficiency ratio, we expect it to improve. We foresee that we're going to end between 60% and 65%. As a consequence of that, our return on assets should be anywhere between 1% and 1.5%.
The Group CEO of Ecobank, Mr. Ade Ayeyemi, speaks further on the financials, strategy, and outlook ahead for the banking group.
It's important for us to know that the Nigerian market is not just about commodities, it's about consumers as well. There's so many people that have not been included in the financials. There's so many small and medium-scale enterprises that we've not been able to connect to payment opportunities that we need to do. We used to use our technology as a means of enabling people to be able to participate in the financial services. And if we do that, then we're able to solve problems at a price point that people can really participate in. It cannot be an acceptable situation when a large number of people do not have an opportunity to participate. It cannot be an acceptable situation when there's so many people that have business ideas and we cannot work with them to convert those business ideas into real-time opportunities. Entrepreneurs are being created outside our continent, and there are things that we produce that are actually desirable by other people. We just need to find a way of being able to improve their values. People say, show us the way to the farm and then show us the way to the market. Because if we only know the way to the farm, we can only feed ourselves. And nobody becomes wealthy by only eating. So we need to find a way of connecting the produce of the farm to the needs of the market. So that some of those things, we need to add value to it, we need to improve it, and we need to be able to take it to the market. And financial services like ourselves can actually work with our customers to be able to get that done. Being able to trade across the African continent is going to continue to be important, and we're the only player that is present in almost everywhere. And working with our customers to be able to do that is one of the key opportunities that we see and key competitive advantages that we have. Recognizing the problem of on time makes sure that we have the opportunity to address it, and that's what we've done. Now we can move forward with confidence that the book that we have, the loan that we have, are things that we can collect properly against.
Amidst the financial headwinds, Ecobank Transnational Incorporated remains poised to restructure its operations to create more value for Nigeria and the sub-Saharan financial market.